Well, guys, we just don't see this very often. What does the latest Goldman Sachs sentiment results show us about the markets? On top of this, why do we now have to be tracking pizza in 2025 and the number 1 and 2 largest trades we've ever seen in the crypto markets? With record inflows coming, could we be about to see a massive breakout? Crazy moves on oil, big moves everywhere actually, and of course a lot more to cover in today's video. Join us as we go through stocks, commodities, and cryptos into what may happen next and the big data surrounding it. Don't go anywhere, guys. We'll see you in a moment. Well, welcome back everybody to what was a day of semiconductors up and big stocks realistically playing the game of risk on. But was it that good? Well, in today's video, we'll break it down together. My name's Tom, and of course, we'll be looking at the latest macro, big data, and huge flows. And there are quite a big number of them. Let's begin with Goldman Sachs and their latest social media economic sentiment index. I have never seen this so high, and that is a surprise when you consider 2021. People on social media are epically bullish, and you can see it here according to the latest 7-day result, and it is way in front of the latest US University of Michigan consumer sentiment report, which has only just started to pick up. So people have been buying the dip, and we know that retail has been absolutely a big part of that, with many hedge funds being behind, which we've covered in our previous videos. This is also on top of the global GDP forecasts actually declining across the board, which actually makes the market now way more expensive, as we are about 2% off all-time highs than we were in February. So what kind of gives here? Well, it's a mixture of different things. Number one, the implied US recession probability has declined from being like 30, 40, 50% all the way back down to kind of like 18% at the time of this recording. And of course, people are just in general extremely bullish. But should we be? In fact, the second half of June, although June does end up usually being a bullish month, is not very good. It's the second worst 2-week period of the year when you track since the 1950s. And this is a fairly big deal when you're talking about sentiment seasonality. This week we have quadruple witching, which is of course the OPEX, generally leading into very volatile Thursdays in particular. And of course we have huge movements just in general because of the conflicts and geopolitical tensions that are out there right now. And this is leading everybody to try to track what exactly is going on. And as we already discussed in our previous videos, it looks like people are literally tracking Domino's pizza orders. There's in fact a new X account that is called Pentagon Pizza Report, which actually tracks whether it's busy or not busy during extreme hours of the night when it comes to certain Domino's stores that are near the Pentagon. And yes, this is now becoming one of the most tracked things from social media when it comes to figuring out if something's going on. In fact, we just saw one about 3-4 hours ago now, and at the same time, it turned out, according to SKB, that we were seeing a huge amount of US military aircraft en route to the Middle East. And as you can see by this flight tracker, there's all sorts of things going on right now. So yes, tracking pizza is now the thing of June, and of course, we expect that to be something that people get onto more and more over the next coming weeks. And it is probably one of the strangest things that I've ever seen in trading and investing when it comes to gaining some form of insight into what might be happening. In fact, it actually was early several times over the last couple of months when things have been kind of happening. Now, we did know that oil moves up generally do correlate with these types of events. And obviously, we talked about in our last video that we expected the spike that was massive to probably decline. That is generally what has been happening. Now, we have since had that. We've had a decline, and then we've had a little bit of a spike up as this is continuing to escalate. And oftentimes what happens is it comes back to around the peak, which would be around that 73 to 75 a barrel, and then it starts to dissipate over the next period. Now, of course, we don't know what exactly is going to happen, but oil is now one of the most dangerous trades because, yes, before all of this happened, there were some nice bullish reads that we were talking about here on the channel together in terms of technicals. Then it happened, then it went ballistic, and now it becomes one of those incredibly high volatile events. And that may not be the best thing for a lot of risk management in our portfolios. And of course, also, generally speaking, it generally does drop off as hopefully these things do calm down. Now, when we move over to the big read that I think we had over the last couple of days, it was that The US market would most likely go up because generally speaking, it always has. If we look at the Ukraine-Russia incident, obviously when that happened, we did see the market drop in the futures, be bought up through the next couple of sessions and continue up for a little while. And we saw the same thing many, many times over the last 50 years. We also know Iran's oil exports mostly do go to China and not the US, so it doesn't have as great an impact from at least that aspect. Oil exports now via the Strait of Hormuz, I think it's called, or Hamas, by country, you can see here is UAE, Saudi Arabia, Kuwait, Iran, and you can see here the amount of barrels, etc. So there's no doubt it's having effect on the barrel price, but do remember this is part of the reason why we did see that spike up in the US. It does tend to be that reoccurring event, similar to why we often see a spike in oil, then a drop, then if it keeps escalating, a re-spike in oil back to those peak areas. And somebody obviously did trade this because they sold off huge amounts of barrels right near the peak there on the Friday session. So as soon as it opened on that spike, they were like, sell. And since then, they've been kind of correct with USO, pretty much the biggest fund, dropping back down and will probably spike a little bit up now that we've seen further escalation over the last 24 hours. What about crypto? Well, the markets on the stocks seem to be kind of holding firm, but crypto is at a very important level. We saw in our previous video that we had monstrous trades coming through ETHU, which we'll look at in a moment, which were massive, massive amounts of dark pools. Well, it turns out, according to the latest CoinShares weekly asset flows, we've just seen new records. $1.9 billion in weekly inflows, 9th straight week of massive gains of inflows, 13.2 billion year to date, new record. And we also have the best week since February for Ethereum. And that's interesting because it's record inflows, yet Ethereum was actually dropping. And it dropped all the way back down to what we call the most traded zone, which was around this area that we then saw the number 1 and number 2 largest trades come off it. Now, we've since then seen a spike up in Ethereum, a bit of a drop down, and that's left what we call a shooting star candle. And as you'll see later on today's video, near the end, we've got a pretty big key level that will create, you would think, a bit of a short squeeze should we get through that. So all eyes are on how does this trade? Of course, we know it's inflows at this stage. We know there are tons of transactions near this peak, and we don't know yet whether this is a distribution or whether it's accumulation. Of course, I'm always going to go with the accumulation side, as that tends to be more the kind of way that crypto works, but that doesn't necessarily mean it will be. And we'll obviously be looking for that reaction very soon and reporting it back here on the channel. So make sure to subscribe if you enjoy that type of stuff. Now, in terms of the other reason why the market's doing quite well, even though GDP is being downgraded, we're just seeing a huge rally in semiconductors. And this is driven by an AI boom, which is now delivering real contributions to the US economy. Semiconductors are the place to be, or one of the places that's been very hot along with metals recently, and it's led into markets kind of doing that recovery. We dropped during the first 100 days of course, the Trump presidency. Then we've kind of picked up, and we now find ourselves coming into that very big turning point. Possibly what happens here between June and September of this year will be the most important read of whether we're going to see some kind of real fall off or some kind of incredible gains that tend to happen if we don't go down the recessionary path. The first 200 to 250 days tends to matter. And that's because we've seen some pretty big changes. But on top of that, we've also seen markets where we've had pullbacks that are very significant, similar to the dot-com rally. And if I had to guess, I'd say we're kind of somewhere between 1998 and 1999 in terms of where we are in the AI boom so far. Does that mean there's more to the upside? Yeah, there certainly could be. Euphoria is running just absolutely wild right now. Anything to do with quantum computing, anything to do with ARK-K, which is a 2021 stock, hyper growth is absolutely flying. And we're also seeing a return of the IPO market, which we're looking forward to doing a special on soon, because the IPO market has a lot of synergies with sometimes the back end of a bull cycle. What's going on when it comes to gold and silver? As you guys know, we've loved gold here. We think 3,600 for gold by October was that kind of our movement. It may even reach it sooner. Some big flows going into gold. Central banks in particular purchasing up, as you'll see in a moment. And silver has been playing catch up. So since we've talked about silver over the last 2 months, it's really appreciated. And that's just playing catch up based on that gold silver ratio. We also know that China's been buying a ton of gold and doing it in ways that we may not be able to see. And of course, according to the latest data that we've been getting from Bloomberg, from Goldman Sachs, from other places, we've seen a lot of purchasing coming in from China that isn't really on the books. We've also seen a lot of backdoor liquidity coming in. Both the US Fed has been kind of injecting a little bit in the markets, and we've also seen world central banks, particularly China, really stimulating their economy. And that's helped HSI, which is one of the big markets that we're kind of feeling are doing pretty well this year. I guess you would say hold fairly well. Now, before we go to the options movements and we look at, of course, some of the lead indicators, let's have a quick look here at the S&P 500. So it did manage to reach down to the daily 20 moving average on the futures. It got around that 59.30 to 5,900 zone. And we do know that there are a lot of puts here. So this is basically a put wall that's been looking or been sitting around that zone. We also know that the market has notoriously liked the 20 moving average on the way up. So both here, over here, here, and now here in the futures. And that we're in kind of...
The ARK Innovation ETF purchased 128,163 shares of NVIDIA for $18.54 million. This reflects renewed interest following positive comments from the CEO. Analysts maintain a strong buy consensus with a price target of $174.38. This indicates more than 20% upside potential despite short-term export challenges. Netflix's stock has surged due to strong earnings and subscriber growth, bolstered by artificial intelligence-driven efficiencies and a successful ad-supported tier. Analysts express caution over potential overvaluation, but overall sentiment remains bullish, with significant options trading activity indicating investor interest. Elon Musk shared negative drug test results for over 20 substances, countering claims of drug addiction made by Donald Trump. Tesla stock closed up 1.17%, but dipped 0.83% in pre-market trading the following day. Year-to-date shares are down 13.22%.